All right. Hey guys, how we doing out there? Doc Severson with you here. Wednesday night, the 8th of May. Welcome to Trading a Small Account, 10 Steps to Make Your Small Account Bigger. Hello, everybody. A couple of you guys have already figured out the game here. I love to find out where people are dialing in from. We got Nate from Ontario. We've got the accountant is dialing in from BitConnect. No, just kidding. Vambo's coming in from New Orleans. We have, let's see, who else is out there? While everybody logs in and lets me know where you're coming in from, just wanted to welcome you guys and appreciate you guys taking time out of your schedules for this. We're going to be talking about 10 steps to make your account bigger. This is one of my favorite topics because there is not anybody out there that does not feel the need for something like this. Okay, so we've got Niz from Algeria. We got Rich from Connecticut. We have Bulgaria, New Jersey, Portsmouth, UK. I'm going to be there in Portsmouth in about 2 weeks. Vancouver, Canada, South Carolina, Granville. How we doing out there? Madrid, Arizona, Leicester. You got to say it right, Leicester, UK, not Leicester. And let's see, we got Morocco, New York City, Brisbane, Australia, Los Angeles. Greetings, everyone from Israel. And we have CNG Tube from Mars. So somebody has beat Elon Musk to Mars. That is outstanding. Amsterdam in the house. Atlanta, Georgia. Been there, lived there, moved out. All right, guys. I'd like to wish everybody a good evening or good morning or maybe even good afternoon, depending on where you are at in the world. All right. Hey, Don Juan, how we doing out there? Okay, without further ado, let's get into it. Appreciate you guys logging in and making sure all the pipes work and everything like that. Again, my name is Doc Severson. I am down here in the lower left-hand corner. If I start to intrude upon the screen, please let me know and I will disappear. Okay, we are not going to be talking about anything, no live trades here today or anything like that, so I'm going to just bypass the disclaimer. I would like to welcome our Omnia customers, a special welcome to all those who are the core of our business. So tonight's goal is to reveal 10 necessary steps for growing a small account. I've got about 45 minutes of material for you guys, so I'm going to go through this relatively quickly. I don't think the voice is going to last for more than an hour, so I won't torture you guys tonight. Do me a favor, though, if you could, let's work together as a team. And if you could hold your questions until I get to the end. And that way, I've had to learn this the hard way. If I start answering questions as we go through this, then we never get done and nobody's happy. So I'm going to blaze on through this and I'm going to give you all the material that you came here looking for. And then I will flip things around and look for your questions. Okay. You guys know who I am. Husband, father of three, student pilot, former product manager, now working from home as full-time trader. I've been trading options, futures. I love technical analysis. We've been involved in crypto for a while now. NLP, which stands for Neuro-Linguistic Programming. And I've been coaching this stuff since 2005, almost at gunpoint. I found that once you learn this sort of stuff, people will knock on your door. It will not leave you alone until you teach them. So kind of made a nice. Trading is actually a very isolating business. Just you, a bunch of computer screens, and the dog. And after a while, it gets to be quite isolating. So working for people during the day is something that I really, really enjoy. So I've been doing this stuff now for 22 years, which is maybe older than some of you online. I don't know. So I've also written a book based on some of the things that I've had to learn to fix myself as well as others, which is called Hacking the Holy Grail, and it's available on Amazon. It's kind of a fun book. Okay, so let's get into it. What is the problem that we're trying to solve today? Trading a small account is difficult. It is a challenge. It is not easy to do. but there are ways to do it. This is what we're going to talk about today. So let's define the problem to begin with. Let's talk about how most trade a small account. They got money burning a hole in your wallet, right? As soon as we scrape together a little bit of cash, we want to use the markets to make it multiply itself. So we have a small account. There's no time to waste. Let's go. Let's make it bigger, right? We've all been there before. As soon as we get a little tiny pile into our account, we want to trade that sucker. So if we look out at something like Twitter, Twitter implies that the next bull market is here. We better get going. We better get on this thing. Hey, Bitcoin's going up to 65K. There's no time to waste. Even Dogecoin's going up to $1. Look at that. Tether's going up to $2. I don't know how that's going to happen, but this is Twitter. So you follow some influencers' trades so that you can get started, right? No time to waste. No time to sit around and make up plans. Let's get going, right? I've been there, done that. Somehow, and isn't this weird how this happens, is that the guru makes money on the trade, but you don't. Because maybe you didn't enter around the same time that you did. Maybe you sat around and waited for a couple of days for it to feel good. Maybe you were just a little late. And so you're sad about that. So now your small account is even smaller. So you say, you fire that guy and you say, I'm going to go find another guru and trade along with them because maybe this guy's better, or this guy made it look easier, or some other people on Twitter said that they were great. So you follow him, and guess what? The same thing happens again. They find a way to win, and you lose the trade. So you're funding somebody else's small account. Well, that's not cool. So begins the death spiral. You get more and more desperate to just get back even again, right? You guys have been there before, haven't you? I certainly have. I've done this before. You get worse and worse at it, and all of a sudden, nothing that you do works, and it is the most frustrating thing out there. There's a very specific reason why this happens. The harder you try, the worse you seem to do until you're well below where you started at. Wait a minute, this wasn't how I envisioned this. So did you know there's actually reasons why this happens? The reasons why it happens is not a mystery. It's very clear as to why this happens. We'll get into some of that today. So what do? Do you fund account again? So, do you go out and, sell some stuff from your garage and refund your account and hope for different results the next time? Use a different guru? Guess what? Same thing will happen again. Or you can learn it the only way I've ever seen works. There's only one very narrow path that you have to follow to success in this world with trading. So let's get to the solution. Yes, we shall. So without further ado, here are 10 steps to make your small account bigger. And yes, the order matters. You cannot skip a step along the way here. A lot of us like to dance along, pick and choose what we want to listen to, what we believe in, what we don't believe in. We want to just sort of skip around and work at stuff. And there is a very specific order why I'm going to go through this. Okay. Step number 1 is called target fixation, and also trading to win. Target fixation. Just curious out there while I'm going through this point, I'm curious if anybody out there is a rider, has ridden motorcycles before, because if you have, then you know exactly what I'm talking about. So target fixation, this is what happens. And it's kind of unique to motorcycles, even though it can happen on just about any device or anything that you're riding. But what happens is you're riding along and all of a sudden you see something along the side of the road, and your brain says, don't hit that, don't hit that, don't hit that. It could be a guardrail, it could be some parked car, it could be some obstacle, it could be somebody in your lane. And your brain says, don't hit that, don't hit that, don't hit that. So what do? You stare at it. And you're like, man, I better not hit that thing. And what do? You go straight into it. Bam. Just like this guy did. That's called a low side, and he's about to T-bone that pole right there. Okay. So this is called target fixation. And motorcycles is probably one of the best examples of it. But guess what? We do the same thing in trading too. I'll explain that in a second. So what you're taught to do is when you ride on two wheels, you turn your head, you literally physically turn your head and look where you want to go. And I tell you what, this is one of the very most difficult things that I had to learn to do, was to literally physically swivel your head into the direction that you wanted to go. Otherwise, you'd end up like this poor chap out here. This is called target fixation. This is the way that the brain works. The brain will focus on what you do. What you focus on will expand, will manifest itself. So if you're focused on this sign here, guess what? You're going to meet that sign. And that's the way the brain works. So we focus on, what's this have to do with trading? We focus on not losing money, right? We sit there, we're flying just over the tops of the trees. And we're like, wow, I don't have much altitude here. I'm only 50 feet off the ground. I better not lose any money. That's target fixation, folks. And presto, we end up losing money. What you focus on expands. This is how the subconscious mind processes information. So what I need to teach you guys is to focus on where you want to go. You have to literally turn your head on where you want to go. Don't focus on losing money. Focus on gaining money into your account. There's another thing too. It's somewhat related. At first glance, you might say, hey, this is the same thing, but we also do this, and everybody does this, right? We trade not to lose. We trade not to lose. I get the question all the time. People call me up and say, hey, Doc, what is a good strategy, or what is a good setup that I can make that I'm not going to lose any money? So I don't want to lose any money. I want to trade, but I don't want to lose any money. Well, wait a minute. If there's no risk, there's no reward. So you're better off putting your money into mutual funds, well, not even mutual funds, like money market or something like that, right? So we trade not to lose. And this is code for, I want to wait until everything feels just right before entering a trade. How many of you have done that before? Okay. So waiting until the trade feels good means, well, frankly, means you're screwed. You're trading with the investing herd, and it's not good. Okay, so if you sit there, and if you've missed out on trades before, like an example might be is like maybe you've identified a trend line, and you're watching the price, and you're watching it, and it's like it keeps coming down to this trend line, and you just, I just can't pull the trigger. It's just every time it comes down to that trend line, I just can't take that long trade. And so you watch it happen for about 3 or 4 times. And finally you're like, all right, that's it. That's it. The next time I see this thing come down to that trend line, by God, I'm going to take that trade. So what do? You take it long. And what does it do? You waited too long. You've lost the edge, because now everybody sees that trend line. Everybody sees what's happening. And guess what? The shorts got loaded up just in time, and you've lost your edge. The trade felt good, and when it feels good, that's probably a bad thing. So this will not end well for the trade if you do that. This is like trading by playing prevent defense. All right, hands up. Who has heard of prevent defense, and who's out there that drives you crazy when your team gets up by a pretty good score, then all of a sudden they kick back in their heels and they say, we're going to play prevent defense. Well, you know what that does? That prevents the win, doesn't it? Right? It prevents the win. It's like, and it drives you crazy because all of a sudden your team's way ahead, and then you see the other team creeping up. It drives you nuts, and it comes down to the last 2 minutes. Prevent defense generally will prevent the win. So don't trade like that. You got to trade to win. Okay. So step number 1, let's pull this back. Let's apply step number 1 and move on. Yes, you have a small account. Don't let that be your dominating thought. Focus on where you want the account to go and not what you're afraid of. Use positive target fixation. Turn your head in the direction that you want your account to go. Do not look down, right? Don't look down. Trading not to lose will ensure that you do lose. It's funny how the brain works, and I've had to learn this myself. This is why I went down this whole path of trying to learn why the brain does what it does. Learn the difference in trading to win versus trading not to lose. There's a huge difference, guys, and you've got to crack this. You've got to learn how to trade to win, because if you don't, you'll be trading to lose, and you will lose. Let's get to step number 2. Narrow your focus. As of today, there are 2,160 cryptocurrencies on CoinMarketCap. There may be others that are out there that are not traded on an exchange. But we're just going to focus on this number right now because these are the ones that we can get to. Somewhere along the line, someone's programmed the phrase, "You must diversify your portfolio," into your head. And there's nothing wrong with that, right? There's nothing wrong with that as long as you're an investor. But your job with a small account isn't necessarily to start building a portfolio, is it? I mean, if you want to build a portfolio with a small account, okay, it's going to take you years to do that. You are an investor. You're not a trader. If your timeline is years, because I'm sure at this point there's going to be people in the chat room or in the chat roll here going, dollar cost averaging, buy the dip, you know. Okay, that's great if you're 22 years old and if you got a ton of time. You can be an investor. You can play the long game. That's wonderful. You can start with a small account. But that's not really what I'm here to talk about. I'm here to talk about explosive growth. How do you get that small account bigger in a hurry? All right, so if you're in a hurry to make that small account bigger, that makes you a trader. And if you want faster results, then you've got to specialize. Specialize. Too many of us are trying to do everything at once. We're trading every coin. Far too many are using several different setups and strategies. We become a jack of all trades. We also become a master of none. Jack of all trades, master of none. Please remember that. So you'll continue to see small, little, ineffective wins and then larger, more frequent losses in this scenario. And that is called a negative expectancy. That's not good. So the only person that wins in this scenario is the broker. Again, understand what Curly's law is. There's a movie that came out a long time ago, probably dating myself here. It's called City Slickers with Billy Crystal. This fella's name is Jack Palance. His name was Curly in the movie. And there's a great scene in the movie, like Billy Crystal can't figure out his life. He's like, how do I know? How come you've got it all figured out? Jack Palance holds up one finger and he says, this is that one thing, and that's what you got to figure out. So I'm sure you can probably find that scene if you just Google it on, or just go onto YouTube and search on that. But now it's become Curly's Law. It's such a great scene. There's been people that have applied it and built entire blog posts and theories around it. It's called Curly's Law. That's what I want you guys to do, is I want you to find your one thing. I want you to find your one thing. That defines who you are, okay? So let's get to applying step number 2. Find one asset to trade. Out of 2,160 coins, surely you can find one to trade. I want you to just pick one, not 2, not 10, not 20, but one, using one setup. Surely for all the setups that are out there, you can pick one. One strategy. Narrow down your approach, become the tip of a spear. Define yourself, become a specialist. Only when you do this will you learn to master that one thing. And just a sideline on that, this is exactly what I had to do many, many years ago. I was your prototypical trader. I had 30 positions on at any one time using a number of different strategies all over the place, getting small wins, bigger losses, frustrating as hell, saying, man, I don't get it. I know more than this. Why aren't I doing better? And so I literally cleared the table off, just swept everything off the table, and I said, I'm going to start from scratch here. I'm going to pick one chart, one strategy, and boom, 2 months later, all of a sudden I had it nailed. And you'd be surprised how deep you can go when you narrow your focus down to one thing. You can go super deep, and it takes no time at all. 6 months later, I put my notice in, quit my job. That was it. That's what did it for me. I'm telling you guys, this is super powerful. Step number 3, build a system. Think about this. What did trading professionals do? A lot of trading professionals are supply chain managers and engineers. This is what we were classically trained at because we think in terms of systems. So we're starting out with a certain amount of starting capital, and that goes into a trading system. Now, whatever that trading system is, we're not going to define it right now, but ultimately we're going to get some kind of an output from there. It's either going to be profits or losses. And then here's the key. What we're going to do is we're going to provide some positive feedback to the system. We're going to take a little of that output. We're going to channel it back into the input, and it's going to be a closed loop system. So we're just going to keep running this thing. This is what trading professionals do. They make adjustments. And this is kind of how I teach this, is I teach it with a strategy development cycle. It's going to start off with goals. We have to have some target that we're shooting for, right? Because otherwise trading is just an activity. It's just like going to a casino and like cha-ching or throwing down the roulette ball, whatever, right? It's just activity. It's not progress. And we're going to define those goals into the market with rules. We got to write them down. We can't figure them out on the fly. A lot of you are doing that right now. We're going to get some results from there. Do they meet our goals or not? It's a yes or no. So more than likely, we're going to need to make corrections. And then we may even need to revisit our goals. Maybe making 10% a week was just too darn aggressive. Maybe we're going to have to scale that back a little bit. But then what we do is we continue to do this again and again and again and again. And the idea here is that you end up gaining altitude. So we're gonna have a little change in altitude here based on every time we go through this, we learn a little bit more. We get a little bit better. Okay, so what happens to new traders versus professionals is that new traders will auger that thing into the ground. They'll go down and down and down and down and down and down and down. They just get worse and worse and worse and worse and worse. The more they trade, the worse they get because they're getting emotional. They're getting more desperate. They're trading not to lose instead of trading to win. And it goes down and down and down and down and down. And professionals, what they do is they go up and up and up because they focus on one thing. In the CBOE, which is the Chicago Board Options Exchange, that is the most expensive real estate in the world. For you to stand in one spot in the bleachers there, I forget how much the seat license costs, but it's in the millions for a square foot. And those guys will stand there all day long and look at one instrument, period, one option, one strike price, and do the same thing over and over and over again all day long. That's what professionals do. Newer traders are all over the map. We're hunting. We're all over the place. All over the place, trying this, trying that, trying this, trying that. It's okay to experiment, but don't risk your capital while you're doing that. Onward. So how do we apply step number 3? Create a business plan, create a trading plan. Journal your trading and learn every cycle. Create a continuous learning system. Focus on being a specialist at one thing and dominate that niche. Don't try to take Normandy all by yourself. Focus on 50 feet of that beach and take that. Is that an okay analogy to use these days, or is that, I don't know. You guys tell me. Step number 4, create the mental edge. Trading means that you believe you have an edge over your competition. Otherwise, it's just gambling, right? If you don't have an edge over your competition, then just go down to a casino because you'll probably end up better off. At least you'll have some fun. Your competition is the investing herd. They're running all over the place. It's a big herd. It's like a big herd of buffalo. They don't know why they're going where they're going. It's just that everybody else is going that way in a big hurry. So you better get on board. And we are herd animals. Human beings feel more comfortable in a social construct. How often do we look for confirmation for what we're doing, either in Twitter or some kind of community? Hey guys, do you guys playing cards? Is this the right thing to do here? And we do that all the time. A little bit of tea. So your competition is FOMOing into every runaway high and panic selling into every pullback. You got to do better than that. You must be different and original if you hope to secure an edge over the rest of the market. So how do we apply step number 4? Stop socializing your investing decisions. Stop looking at Twitter. Stop looking at Telegram pages. Stop looking at Discord sites and saying, guys, what should I do here? Should I do this or should I do that? You're socializing your decisions. There's no edge there. You've got to figure out, again, you got to figure out one thing that you're going to do and master that. Don't throw it out to the world. You're just going to get confirmation bias. So looking to others for directions won't give you an edge. It will give you confirmation bias, which is almost always wrong. Learn to make decisions not from fear, but from objective strategies and signals. I realize that this is difficult to do. This is not something you just, flip your fingers and it's all done with. It is difficult to stare a sell-off in the face, and it's like standing on the train tracks while a freight train is coming down and you're like, halt. It's not easy to do. It takes a lot of stones to do it the first time, but you'll eventually learn how to get on the other side of the herd. And it is all about making decisions not from fear. Your edge will be based on how well you can take advantage of them. That's your job. Your competition is the herd. Take advantage of them and everything that you know about them. Yes, it is absolutely, we're absolutely live. At least we are right now. Now, there's going to be a lot of people that are going to be watching this from the archive, and I'd like to welcome those as well, too. I want to make you feel like you're here. Step number 5, we're almost halfway through. Got to motor on here. So how do we create a trading edge? Contrary to what you'd expect, most technical strategies lose money over time without context. Surprise! This is for a few different reasons, mostly because markets are not always trending cleanly, and most studies don't really offer an edge versus the herd. Okay, this is the same thing as saying, I'm going to wear this outfit all year long outside. And where I live for about half the year, I'd be way too cold to do that. So applying the same approach, depending on the same market, okay, you'll get lucky half the time and your strategy will line up with what the market's doing, but the other half of the time, it's not going to work at all. This is where we have to use our brain and look for quality in the setup, not quantity when it comes to trading setups. So very specifically, setups that offer asymmetric reward to risk. What on earth is that? What on earth is asymmetric reward to risk? Think about this for a second. Okay, so you got a downtrend. Lower highs, lower lows. Lower highs, lower lows. Lower highs, lower lows. What's happening to the bears right now? What's happening to the bears? They are getting confident, right? The bears are getting confident because we're in a nice downtrend. The bears are getting confident. And you, on the other hand, are looking on the other side of their trade. You're looking for, what's my edge here? Now, what happens is, if this comes up to a lower high and a higher low, surprise. So you're not predicting the future, but what you're saying is, hey, if this trend line gets broken to the upside. And if the price prints a higher low and a higher high, you're going to see one epic short squeeze off of here, aren't you? This is an asymmetric reward to risk. What is your risk? If you take a long here, your risk is basically right there. This is your risk that you're setting up. So it's this little delta is your risk. Meanwhile, the reward could be huge on something like this. So this is what I call a trap setup. I'm trapping the bears down there. They're getting squeezed. They have to buy back their positions to close them. That further adds more accumulation. This is what an asymmetric reward to risk trade setup looks like. And this is what I look for. This gives you trading edge. So it's not me just slapping some stupid indicator on here and hoping for good results. It's actually using my brain to understand how price moves. It's very important. So how do we apply step number 5? A trading strategy will not make money just because it's a strategy. Just because, hey, stochastics are cool, or hey, this other guy really likes MACD histograms. Super. Add some context to it. Backtesting only shows how it performed in that specific volatility. Go a step beyond your setups. Learn to identify asymmetric reward to risk. You will find this in any professional's toolkit. Step number 6, use strategies. Don't wing it, use strategies. So if you're trading one very specific asset per step 2, then you should also be looking to master one specific trading strategy. And the struggle is real, guys. I understand this. The struggle is real because you get into TradingView and all of a sudden you look at the built-in strategies and my God, there's dozens of them out there, aren't they? And they're all really cool looking, aren't they? Like, you know, Andrew's pitchfork. Hell, that sounds cool. I want to add it to my charting, you know. Look at all these things. The Chaikin money flow. All of these are based on price and volume, though. There's no magic here. Experiment with different strategies in a sim format. So paper trade these. Don't spend your money learning on them. Ultimately, you want one thing. Don't make the mistake of being a jack of all trades. So how do we apply number 6? Keep experimenting. Go speed dating. This is what I call speed dating, where you're just trying out different things until you find something that works for you. So I use the fractal energy trading system for everything that I trade. This is something that piece by piece, brick by brick, I built this up myself. I've borrowed ideas from other people. Some I just sort of like assimilated and put together. But ultimately, this is what you do. You create. Oh, why do people do this to me? You know what that is? That is my college. My fundraising department from the college that I graduated at, like a million years ago, their fundraising department must be falling behind. So sorry about that. Okay, so fractal energy trading, this is what I use for everything. I use it for day trading. I use it for day trading NASDAQ futures. I use it for trading crypto futures. I use it for trading swing trades in crypto. Everything is based on one system. You can tune it to whatever you want it to be. I only have to learn one thing. And to me, a chart is a chart is a chart. Once you find that one thing, it means you can ignore the grail search, looking for the Holy Grail, and focus on getting better and better and better. This is where you really start to make progress. Step number 7, we're flying through these now. Use tools of the trade. One of the first excuses that I hear from traders with a small account is, well, I have a small account. I don't have any money to buy proper tools. I want to do it on the cheap. Can I do it for free? Okay. Your logic is incorrect, sir. This is a scarcity mentality, and this will ensure that your results are correspondingly scarce. Okay. Not cool. You don't need to outspend your competition. You don't need to spend 10 times what you can't trade blindfolded. You can't hamstring yourself with this. Your trading tools are part of your business expenses. You did say that you were going to treat this like a business, right? Yes? So how do we apply step number 7? Do you have the best broker that you can use? Regardless of commission, get the best broker that you can use. Does it offer the minimum feature set? Does it offer the liquidity that you need? You do have a choice that's out there. Are your charts and analysis tools up to the job? There's a certain amount you can get for free, but beyond that, if you make the decision that you're going to be good at this, you'll have to invest in some tools, right? Do you have the right hardware and software to make great decisions? Well, I was going to get into that trade, but my Vista locked up, and I got the blue screen of death, and, excuse, right? So don't have a scarcity mentality. Again, turn your head towards the direction that you're heading instead of looking down at the ground. So if any of these are a no, that you're in a disadvantage. Step number 8. This one's really cool. And I am thinking of doing a live stream on Friday to explain this. This is like super cool. I see nobody talking about this anywhere. This is ratio-based money management. So think of this, 3 pillars of trading, and this is an Alexander Elder thing for those of you that want to read his books. It's this Russian guy this is back during the Cold War days. He actually stowed away in a boat, and he was able to, claim asylum somewhere in the United States. And so he started writing books and trading and stuff like that. So very interesting individual. So method, mindset, money management. You've got to have all 3 of these on a 3-legged step stool. If you have any of these that are missing or short, you're going to fall over, right? So you got to have all 3 of these. But nobody talks about money management, right? Nobody talks about money management. You hear people give lip service to it, but nobody talks about it. It can lead to exponential growth if you know what you're doing with this. I often talk about rule number 2 of risk management, which is to limit the risk on any one trade to 2% or less of your capital. The hack here is to set up ratios that permit you to trade with increased utilization once you achieve a set level of profit. Think about this, okay? If you are, you start off at this level of capital. If you start to actually build your account up, then 2% down here is different from 2% over here, is it not? Yes, everybody agree? So this is called fixed fractional money management. So some people do this by accident, but nobody really thinks about what's happening here. This actually could lead to exponential growth. So some new techniques are being discovered in the field of money management, and this is the current state of the art, is called fixed ratio. We don't have the time to explain this, but I will, if I have a voice on Friday, if I can do this, then I will go through a trade school, and I will invite y'all to that trade school, and we'll talk about fixed ratio money management. It's very cool. And I think a lot of you will like it. So how do we apply step number 8? Remember to increase utilization as account profits create more altitude. This can be done through fixed fractional or fixed ratio money management schemes. This will be part of your trading plan. Again, most people don't use any kind of money management. They just keep doing the same thing. Well, I'm just going to try, I always trade, 200 Satoshis for trade. And they don't think about how that applies towards the bigger picture. So understanding how to dynamically change your position size is very, very important. Step number 9. We're just about on time here. Use leverage. Use leverage. Now think about this. You can set up a trade that mimics the weight of a much larger account. You can gain a lot more with small capital requirements, but understand that the knife cuts both ways. What I mean by this is that you can also lose money twice as fast with leverage as you gain money. So what does that mean? You've got to have a positive profit factor. You've got to have positive expectancy for your trades. Otherwise, you will auger into the ground, right, using leverage. So dozens of vendors supplying futures, synthetic futures, and perpetual swap instruments out there. You guys all know the names. There's also a handful of options player in the crypto space as well, too. Please do not use those yet. Those are like Deribit, LedgerX. I'm sorry, guys, but the liquidity is just not there yet. The spreads are just so wide, and I see people begging with each other, hey, can somebody take these, 5,600 strike calls off of me? And it's pathetic to watch. There's just no liquidity yet. So these are derivatives of the spot instrument and require far less capital to establish a long or short position. So this is actually allows you to trade short or to the downside. So the problem that I have here is that many traders jump straight to this level. Hey, I just got involved with crypto and now I'm going to sign up a BitMEX account. Woohoo! And you know what's going to happen to them? They're going to show up on the rec list. So how do we apply step number 9 with leverage? Carefully, only when you have created a profitable system should you consider this step. You've got to get all the way up through level 8 before you can get here. I'm serious about this. You can't just say, hey, I think I'm going to trade futures now. With a small account? Are you nuts? No, don't do it that way, right? Build up your skills before you get to this point. So many traders jump into this step and they fail very quickly. These are the power tools of crypto. If they use properly, right? Think about power tools. You want to build a house, you can either do that with a hammer and a handsaw. You could build a whole house with a hammer and a handsaw. It would take you forever. Or you could use power tools. But you got to know what you're doing. Might lose a finger if you don't know what you're doing, if you're risky. Okay? Now here's step 10. We're finishing up. We're just about on time. Never ring the bell. Some of you know what this means. Never ring the bell. The Navy SEALs training facility in Coronado, California. Notice, I study the SEALs. There's a lot of people that have written books that are former SEALs that have written books. These guys are phenomenal because what do? They're able to close the gap between what they know they want to do versus what they need to do. These are performance individuals that we need to study. And man, is that a cool looking bike back here. So at any time, I'm sure you guys all know what the SEALs go through during BUDS. I mean, it's literally torture for 6 months of BUDS. They're literally just beat up continually on a day-to-day basis. At any time, they can ring that bell, which is right in the middle here, ring the bell, and they're done. And they're given warm food, they're given something to drink, a nice towel, they can dry themselves off, they can feel creature comforts for a short period of time, and then they're sent back to the fleet. But that forever terminates their quest of being a Navy SEAL. That's it, you're done. We're not going to consider you again. So if you ring the bell in this business and trading, you end up working with this guy who will start the conversation by telling you how great his research department is and will start talking to you about life insurance and portfolio diversity. Hey, we want you fully diversified with stocks, bonds, and mutual funds. Oh my God. No, we're not going to go down that road. We know what these guys do, right? There's a reason why these guys dress well, because they're well paid. From whom? You, right? So this is why we are self-directed investors. So what if you fail? You will. That's the whole point. Then you move on. You learn from it. Failure on an individual trade means I have the opportunity to learn something. You will not learn much from a winning trade. You're not going to learn a thing from a winning trade. You're going to be like, I rock, I'm great, I'm unstoppable. Treat a failed trade as a gift and learn everything that you can from it, because this is your delta. This is what you have to fix. What you will mostly learn is how you responded to that opportunity. Did you get scared? Were you acting out of fear? How can you change that? So never ring the bell. If this is what you're meant to do, then never ring the bell. Never quit. So only when I focus my efforts on one asset, one chart, one strategy, and put a plan into motion with all the elements I've shared with you guys today, did I start to become consistently profitable. And it was tough. It was tough. But then all of a sudden, when I simplified, everything just became very easy. Very easy. So trading a small account is a challenge, but it's a great place to start. You can't do that much damage. I have literally seen guys that started trading with a 7-figure account and they burned that thing down to nothing. Can you imagine how they feel? They learned all those lessons and it took millions of dollars from them. It's disgusting to watch something like that. Meanwhile, if you have a $500 account and you completely blow it, okay, dust yourself off. Don't ring that bell. Build it back up again. Sell some more crap from your garage. Build another $500 up or whatever. Get a few quid. And start again. Dust yourself off, start again. Never ring the bell. It's worth it. Okay, so let's do a quick recap, and then I'll get into some questions here in a minute. We looked at how small account traders get target fixation on lower values and trade not to lose. We saw the power of focus, of finding one thing. We saw how we needed to create a system to run our small account trading like a business. We saw that creating a mental edge was necessary to get different results from everybody else. We did learn about asymmetric reward and risk. We saw that it was important to adopt one trading strategy and use the necessary tools to compete with everybody. We learned about different forms of money management, of using leverage, and lastly, we learned to never, ever, ever, ever ring the bell. So these 10 steps, while they might seem simple, took me the last 2 decades of my life to fully accept and internalize. These are not simple to do. It's easy to read about them. It's easy to think that you can do, but it does take work. It does take persistence to get through some of these. And you have to start at the bottom. You can't just sort of pick and choose. Well, I like number 7, but number 5, forget about that. I'm not going to do it. Got to do it. Okay. So I'm sharing them with you today with the hope that they can make a difference. So I hope that this resonated with you guys out there, that gave you a little bit of hope and gave you kind of a pathway on what you can do, but you got to use them in order. Now, those of you that want to effectively trade your small account, I do have one more offer for those ready for it. And it is a trading a small account class. Surprise, right? What is this trading a small account class? Well, I'm the man, right? So we're going to put over 2 hours of video content in the members area, access to small account trading channel in our community. This is really cool. This is something new that we're going to do, is we're going to have a channel just for the small account traders to be able to talk amongst yourselves and commiserate and figure out what to do and how to build plans and things like that. So this is actually going to be really inexpensive for you guys. I don't want to burn more of your capital than you need to. So it's a $79 one-time charge, but it's on sale for $59 tonight. Those of you that are Omnia members, get it as part of the service. The discount disappears this weekend. Why am I doing that? Well, I want to form a group and get the group working together. And I can't do that if people are going to think about it and get ready. Well, I'm getting ready to get ready. I want people that were willing to take action and jump into this and join another group and get somewhere and get started. So here's what we'll cover: how to stay focused on the goal, trading to win. How do you trade to win? How to narrow your focus and find your one thing. How to create a trading system and run it like a business. How to create a mental edge for trading a small account. Understanding asymmetric reward to risk. How to add a trade strategy. What are the tools of the trade? What is ratio-based money management? How do you trade with leverage and how to do it safely? And how do you not ring the bell? How do you not quit? There's things that you have to do not to quit, right? So you can get access today. This is what the class looks like. And I'll show this to you in a minute. And here's the URL, readysetcrypto.com/small. Save $20 if you order today. You get it for $59. You can either use Visa or PayPal. Unfortunately, our crypto plugin is not working right now. That kills me because we're in this business. Or I want to offer an alternate offer for you guys for $79 a month. How would you like to access to everything that we do? The daily newsletter, 13 classes right now, and we're adding at least a class every month to this. We've got our great crypto community. I'll show you this in a second here. Weekly trade schools with me. These are live, as well as weekly crypto roundtable with Mav. You know, the guy with the big deep voice. Okay. So this is kind of what this looks like here. Let me show you the members area. And if you go to this, you can see the premium class archive. So you can see all the classes that we built over the last year or so. Fundamental analysis, introduction to technical analysis, security and wallets, short-term trading strategies, how to manage your portfolio, how to create passive income through crypto, fractal energy trading. Oh yeah. Trend trading, which is actually very useful right now. Security tokens, very cool new STOs. Futures, how to get into trading futures. What is decentralized finance? And oh yeah, way down there at the bottom, trading a small account. So you can see that is the actual page here to get started with this. We also have, if you want to sign up for the Omnia service, you go to readysetcrypto/services, and there you go. Now you can just get the newsletter at $39 a month if you don't want the other stuff. But for $79 a month, you can access to every class that we've got, as well as everything that we'll do in the future. And this is our community. No, we're not going to switch to that device yet. But this is our community right now. We've got all these different channels. We've got trading ideas. We've got things on, here's the small accounts that just started. You can be the first to post in here. Futures discussion. Talking about trading futures, trading plans, everything like this. It's not just me. It's not just Mav. We have a whole group of people here who are all trying to do the same thing. Get consistent results in the financial markets. Okay. So I'm going to open it up for questions now. Here are the links that you guys need to either join me in the class, or if you want the full enchilada, join me as an Omnia customer, readysetcrypto.com/services. Thank you for your patience, and I will start taking questions. Ready, set, fiat. Oh, I love it. Oh, that's nasty. That's savage. Mr. Penguini, how we doing there? Good to see you. All right, let's see. Justo, can 7,000 BTC trigger panic sell? Apparently not. What is considered a small account? It could be anything. I mean, you know, the great thing about crypto is that you can shave this thing down to so many Satoshis, right? But there, some of the futures brokers, if you get up to level 9 and start using leverage, you can actually do quite well with very, very small amounts of capital. So some of the, I mean, you know, you're trading effectively with 100-to-1 leverage. Again, 100-to-1 leverage, that is not for a rookie. This is something that you've got to be good at what you're doing. But 100-to-1 leverage, you know, think about that. A Bitcoin at 6,000, you're only leveraging $60 for a trade like that. So phenomenal. Can you just give your money to a bot? Okay. So James, that's a great question. Do you just give your money to a bot? I think what you need to do is, before you just turn on a bot And quite honestly, if you're just turning on a bot, more than likely what you're doing is you're asking somebody else, hey, what strategy should I run with this? I think that you need to find your one thing and then program the bot. Find your edge and then program the bot with your edge. So that I'm a big believer in using bots for the right reasons and in the right markets. Don't use a bot in a bear market. It will grind your account into hamburger. But in a primary bull, a bot is going to be absolutely required. And we're going to be covering that one, I believe, in the July timeframe. Is there a futures broker you prefer at the moment? Yeah, it would have been Digitex if they'd come out to market, but they're not yet. Right now, I've tried a few of them. I actually like Prime XBT a lot. I mean, it's not, does it have the smallest spread? No. Does it have the smallest commissions? No. It's just got a really good interface and they've got plenty of liquidity. There's other ones like Bex Plus, Coinfolio. I've looked at BitMEX. BitMEX is actually, I mean, I'm technically not allowed to use it, and I would not fund that account because they are going after U.S. customers big time. Sean, this is a good question here. What do you suggest to speed up the time it would take to master each step of the 10-step process? Focus. Narrow down your scope of activities to one thing. And I think, Sean, that you'll be surprised how quickly. Now, the difficulty for a lot of people is, well, what is my one thing? How do I determine my one thing? And that has to come from you, unfortunately. That has to be something you've got to. There's a fellow by the name of Brett Steenbarger who coined the phrase, find your rage to master. And that's such a great phrase because it's so descriptive of what you have to do. You've got to get something that just gives you just got to be on fire and unstoppable. So once you get the rage to master, there's a condition which Seth Godin has built called the dip. So if this is time, if we're going to measure time and effort on something, you'll start out with something and initially you put a lot of effort into it, right? And then all of a sudden you start getting really bad results. And this is the dip. And you got to power your way through the dip to get better results from that. So finding something that gives you the rage to master will dramatically cut your time. In my opinion, if BTC breaks the 6,000 resistance, will we see a FOMO? Actually, I covered that on my newsletter tonight. I did. I believe there might be a chance because everybody's assuming that 6,400 is going to be a brick wall of resistance. And what happens if that breaks? All of a sudden, you're going to see millions of people go, oh, crap. I thought this was going to pull back, and it's not. I mean, there's already a lot of people that are going crazy right now because it hasn't pulled back yet. Jane, do I think the bulls are back or do I think that Bitcoin will hit the floor before it bounces back? I think that, well, I don't know the future, Jane. I wish I did know the future, but I don't. So all I can do is frame in the price action. I can do things like this where I can say, well, let's go to a different color here. I can say like, all right, if the price is doing something like this, if it falls down below here and prints a lower high, or if it goes below a fib confidence level, then here are the actions that I'm going to take. So I don't know what is going to happen in the future, but I know the levels that will cause me to take an action. And that's the way I prefer to see you to do that. I do believe there's going to be a lower or a higher low in our future, which will scare the bejesus out of most people into panic selling. And I think it's necessary to create that because the way that markets move is you got to take one step back to take two steps forward. High volume is always a good thing. High volume is always a good thing because it creates liquidity and it creates those big buy and sell walls, right? It creates that depth of market that you want. So I don't care how it's there. I mean, in equity markets, there's a hell of a lot of wash trading. It's out there. Just guys flipping it back and forth. There's the HFT guys, right? High frequency trading, just trading between the spread. That's fine with me. The press seems to hate it, but I think it's great. What moving average do you recommend? See, that's not the way I operate. That is not the way I operate. Okay, any other questions? We're going past our time just a little bit here. I do want to remind you guys, if you're thinking about this, let me know if there's any questions on the course. You can always email in a question if you have anything on the course, but I would recommend that you jump on this thing before while we'll still have a discount, or just join us on Omnia, which is, I think, the much better way to do this. I mean, think about all the access to all those courses you're getting right off the bat and all that accumulated knowledge through the community as well, too, which is phenomenal. Okay, let's see. One last question, and I will bid you guys adieu for the evening. Yeah, thank you, Ilya. Okay. Yeah, cheers. Smash the likes. Smash the likes. Hey, I will. I'll also mention. Hey, we're going to be in London in 2 weeks. Mav and I are going to be in London in 2 weeks. So the 21st, we're doing a little meetup. So we're going to be completely shagged out from jet lag, but we'll love to see you guys if you want to meet us in London. Do I cover stocks or crypto only? Actually, I do an options newsletter on the side, which is there's a service called Docs Trading Tools, but I'm not here to talk about that. Yeah, one step backwards to take two steps forward. There we go. All right. Hey, guys, I want to wish everybody a good evening here. And thanks for hanging around with me. And I will do a very quiet little outro here, very quietly. So look forward to seeing you in the class and in the Discord room. And if not, I'll see you online on maybe tomorrow and also Friday. All right. See you, everybody. Take care now.